Hey everybody, Economic Ninja here. We're going to talk about interest rates today because interest rates are so vitally important, right? Everybody's waiting for the Federal Reserve to pause because they believe after the pause, then they're going to start to lower, and then that monetary heroin just gets shoved right in their arm and the markets start taking off again. But I am telling you, I think it's opposite. But Larry Summers, former Treasury Secretary, has come out and spoke. And remember, I've told you this before, it's very important to watch the Fed speak, the rhetoric that goes on between the Federal Reserve governors and former Federal Reserve chairmen and governors, and also former Treasury secretaries. It's very important, right? Because there is a narrative. They already know where they're really taking these rates. What you don't know is half of them always tell you the truth, half of them tell you the lie, because it's literally set up to confuse you and deceive you, all right? I'm not joking, but we can watch where this one goes. If you notice, Fed governors are always coming out and saying, I believe that we need to raise rates. And then there's other ones say, I think we should lower rates. But the Federal Reserve chairman never, ever speaks. They always say the exact same thing. Well, we are policy driven, and depending on where the data goes, policy and data driven, and so wherever that leads us is where we will go. They stay totally neutral. And once you understand this, you can start to see how they're going to move. And right now, the Fed governors are weighing heavier on raising rates. I'm telling you right now, they're going to continue to raise rates, especially as data keeps coming out showing that they have not broken your back yet. That's what they want. They want you unemployed. I'm not joking. Then they want you begging them to print money and begging them to lower rates to only blow up those asset bubbles more. But here's the thing, it's not an overnight event. And these are why you need to understand these signs to be able to go and crush it in the housing market, because there is so much time delay in these events, because human beings, the sheeple, the ones that are just have no clue, all they want is to make it rich and they want to make money fast, and they never ever make money fast. You don't make wealth overnight. As soon as if you make it overnight, like crypto billionaires, boom, it's gone overnight, because you don't know how to deal with it. You don't have the patience to deal with it. So here's the deal. Larry Summers is coming out and saying this. Check this out. It's out of Fortune magazine. It's entitled, Larry Summers says that the Fed should consider doubling down on interest rates in July if it pauses in June because of the risk of overheating the economy. All right. So now this is an interesting take. And I told you this before. If the Fed, or when the Fed actually pauses, if they pause any time before it allows the market to naturally combust, right, as it's raising rates, it's going to have to adjust for that pause, because what it's going to do is going to cause irrational exuberance. And that's a quote from Greenspan. Well, back in the late 90s, when he was talking about the dot-com bubble. Sorry, I don't want to just leave you in the dark. But my point being is that what's happening is that when they pause, stock markets are going to rally. People are going to dive into the housing market because they think, hey, I'll get this high interest rate mortgage, and it's okay because all the loan people are going to be telling them this. Oh, don't worry, they've paused. That means they're going to lower next. So you could refi. So even though it hurts right now and the payment's too much for you to handle, don't worry. You're going to be able to refi lower. That's because they're dumb thinking, okay? If you want more information on that and to see where we are in that housing market bubble, Real Estate Crash Course, I'll put a link below for 70% off. It's like $300. Point being is that these are very easy to identify principles and issues. They are literally, there's principles in economics and how these guys deal with stuff and the Fed speak and all that stuff. And then there's issues that the principles start. All right, here we go. It says right here, there is certainly no shortage of ideas on what the Federal Reserve should do when it comes to interest rates. But former Treasury Secretary Larry Summers' latest proposal is one of the more unique ones of late. While other economists strongly argue that the central bank should pause its recent trend of rate hikes, Summers tells Bloomberg that the Fed should be open to a half-point increase in July. 50 basis points. We haven't seen 50 basis points in a while, right? Especially if it opts against an increase later this month. So that would give you a little bit of hopium. Think about this. If the Fed doesn't raise rates in June, they would give a bunch of hopium into the arms of home buyers, investors, speculators, and then they could turn around and just push that can down the road just a little bit farther and then hit you with a 50-point basis hike in July. Now think about this. When they hit you in July, it's like nothing ever happened. But they were able to extend market gains for 30 days. All right, so think about that. Very interesting take. We are again in a situation where the risks of overheating the economy are the primary risks of the Fed, or that the Fed needs to be mindful of, Summers said. If they don't raise rates in June, I think they have to be open to the possibility that they have to raise rates by 50 basis points in July if the economy continues to stay way hot and inflation figures are robust. Look, the fact of the matter is, inflation figures are robust. You know, they talk about, oh, inflation's not as high as it was a few months ago. It's still high. You have not done a whole lot, as a matter of fact. And really all you've done is cut out discretionary spending. So when you take a look at the entire inflation metric that has some energy and some food, not all of it, right? Then it has discretionary spending. It's got home, you know, it's got housing, and it's got rents and, you know, all that kind of stuff, right? And discretionary spending still in there. Well, because some people have pulled out of discretionary spending and tightened how much they spend, you see inflation figures fall, but the other figures like energy and food are still skyrocketing, right? So the Fed has not done their job. They have not raised aggressively enough, fast enough. Well, what's scary is that this is one of the fastest rate hiking cycles in history. It's impressive, actually, what's happening. Says Summers' comments made Friday followed the May job report, which was far greater than what analysts were expecting, with payrolls increasing 339,000 versus expectations of 195,000. The Fed has signaled that it plans to keep interest rates steady and skip an increase when it gathers on June 13th to 14th. So that's, again, it's talking about how it's signaling. Even if it does, I'm telling you, the long-term trend are higher interest rates. Okay, it's just going to juice the markets. Now, you have to also remember, too, something that most people don't think about. The old adage, sell in May and go away, is still very much alive. A lot of seasoned investors sell a majority of their stocks in May and they walk away. Why? Because they know that trading is going to be low. They all want to be vacationing because they're the elite. They don't think like you and I. They don't have to show up to work every day. Hey, I would love to be retired right now. I'd love to have a nice boat and be sitting in Florida right now just fishing. Just barefoot and fishing. I mean, seriously, put down in the comment section what you would like to be doing if money was an issue. But for the elite, they just sell their stocks and sort of go away, and they don't really pick it back up until September, until the economy wakes up again, right? And they're not, you know, sitting at the beach with their nice Coors Light, not Bud Light, and just enjoying life, okay? So you got to remember, too, the Fed's got to think about this. Like, we're in an actual economic crisis right now. Even though these payroll numbers are coming out high and employment's more robust than they want it to be, you've got this sell in May, go away. You've got a lot of money not sloshing around in the stock markets. So you're like, how could you juice it? Well, you could promise everybody, hey, we're not going to raise rates this month, and just, but then crash all their hopes going into July. Now, I still am on record for saying that I believe we're going to see massive, massive downturns in the fall this year. And I still hold true to that. And I think people need to be prepared for that. So what do you do with all of this information? Well, I'm going to tell you what. If the Federal Reserve pauses in June, right, which I guess at this point could be a 50-50 shot, you need to look at it and don't believe your lender and saying, hey, you know what? You can get to this house now. Rates came down a little bit because mortgage rates are going to dip a little bit. And they're going to dip more because when the Fed goes from pausing to lowering rates, just refi. Don't believe them. Do not believe them. You need confirmation. And that's why I put that into the course and how to confirm. We're talking multiple drops, quarter over quarter, until you start looking for deals. And trust me, nobody's going to be out there looking for deals along with you. Guys, I'll put a 70% off link to that course down below. I hope you guys have a great day. I hope you got something from this. The Economic Ninja is out.